Uh, Hello, everyone. It is 2 o'clock. I know that we still have people joining, but it to be mindful of everybody's time, I just want to thank you guys for joining this webinar. This webinar is funded by Ag FTAP, the Agriculture Finance Tax and Asset Protection Education Program that seeks to enhance farmer and ranchers' ability to understand and navigate the farm business tax and asset protection decisions for their operation, as well as important relationships between federal income tax and the USDA farm programs. My name is Harley Moore Wilson, and I work for the Native Agricultural Financial Services. The Native Agricultural Financial Services mission is to be a reliable and trusted partner in providing capital to support agricultural production, rural business development, and rural infrastructure for Native American farmers, ranchers, and agricultural communities. And today, our presenter is Mr. Rob Holcomb. He will be presenting over record keeping and how that ties into agricultural taxes. And so I'm going to allow him to start sharing his screen. And while he's sharing his screen, I have a few housekeeping tips. Um, Mr. Rob really prefers to answer all questions at the very end, but if you don't want to lose those questions, you feel free to put them in the chat or the Q&A box, and I can gladly read them at the very end of the presentation. Also, at the end of the presentation, um, will promote everybody to be able to speak and ask questions freely. And so you'll have that opportunity as well. At this point, I'm going to let Mr. Rob take it away.
Okay. All right. Well, thanks, Harley. I appreciate it. Welcome again to everyone. And it's good to see. And I see our number keeps popping up here a little bit. So, I'm Rob Holcomb, and I'm an extension educator in ag business management with the University of Minnesota. I'm coming you to today from my office in Marshall, Minnesota. I live in the southwestern part of the state, and if I appear distracted, we we have a we have a tremendous snow slash windstorm going on right now. I have a west-facing window, and I'm looking out here, going, "Wow." So that's all I'll mention about the weather. We've had some interesting weather so far today. But I'm here to talk to you today about record keeping. Now, a little background on me. I work in the area of ag business management. I've been an enrolled agent, which is a credential that gets assigned to me from Internal Revenue Service. I've had that credential for over 20 years, and what that allows me to do is that allows me to represent clients before the IRS. You know, I have essentially the same tax privileges as what a CPA would have. So, but I also am the tax school director for our University of Minnesota income tax courses. So I do a lot of education along the lines of taxes. When I first came to the university over 20 years ago, I started with out as being a field analyst for one of our farm management associations. So I've spent a fair amount of my career as a farm consultant. So during that period of time, I've worked with producers a lot on helping them keep their records straight. So, a lot of what I'm doing in the presentation today is, going over some very basics, but I'm also going to be sharing some things that observations that I've had over my career that might help you out. There is no folks on the record keeping side. I will start this thing off. This is when you talk to farmers. This is probably one of the least favorite things that farmers want to do. Farmers want to be outside working the livestock on the tractor, scouting crops. I mean, they want to be out farming. I mean, sitting in front of a notebook or at a computer doing farm records just is, for most producers, is not the top of the list for things that they want to do. But it is so unbelievably important. Earlier in my career, I had a colleague, and his regular statement was, the greatest potential for increasing net farm income is on the management side. The management side starts with what we're talking about today, having a good set of books. with the association that we have here in Minnesota that's university affiliated. One of their main things that they repeat at all the meetings is, folks, if it isn't written down, it doesn't exist. All right. So there is a great need in what we're looking at with this. Now, here is actually get the clicker to work here. Okay, here's my contact information, and folks, uh, that's how you can get a hold of me, and feel free. I have an outreach appointment with University Extension, so it's not out of bounds. If you have a question down the road, certainly reach out to me. I will make a strong suggestion though. I do a fair amount of these types of talks, which this is considered more of a national level talk. I also do a lot of stuff in state. I travel a lot. Tomorrow I'm going to be 3 hours from here, snow or not. But email, folks, is by far probably the most efficient way to reach me. That phone number does ring at my desk here, but I am gone most of the time during this time of the year. So it is a good idea to probably try to initiate a conversation by email. If we end up talking on the phone, it's best to probably set up a time and initiate that through some email on that. This is as much of a disclaimer as I'm going to give you today. Just as a general rule of thumb, I use this slide at our tax schools, at our farm and state transfer schools. We've got a financial boot camp workshop that we do. I use this for most of our ag business management programming. The message is simple. Be a good consumer of professional services. I always discourage producers from self-preparing their returns. Now, I know you can go to Walmart and you can buy off-the-shelf software, and it's not that expensive, and you can just plug in the numbers and answer all the questions and do your return. I very rarely have ever seen one of those self-prepared returns for a farm that was correct. Farm tax rules are different from just about everything else. You compare farm tax rules compared to what a hardware store has to use. It's no comparison. I mean, the depreciation is different. We have to worry about, farm specific parts of the IRS code. And I really think if you try to do that return on your own, you're doing yourself a disservice. Now, the reason why I say be a good consumer of professional services, seek out a trained professional. All right. If we're looking at doing, the taxes, and you're seeking out somebody to do the taxes, they're going to be more than happy to help you set up a record system, particularly that chart of accounts, because they don't want those records showing up as a mess when it comes time to do the return. So, but reach out to those folks. All right. Be a good consumer of professional services. Now, resources that we're using today, I'm really pulling from three different areas. The Land Grant University Tax Education Foundation, that's a group of 30 land grant universities from across the country. Minnesota happens to be a member of that organization. That organization puts out a number of textbooks that we use for a lot of our fall tax courses. Now, most of that material is directed towards tax professionals and attorneys, but I am drawing some information from that. Ruraltax.org is the another name for that is the National Extension Income Tax Education Committee. I happen to be a member of that, and that committee does have a website that we populate with free income tax information. And you could reach that either by clicking that QR code or just typing in ruraltax.org. You can access there's fact sheets, there's tools, and I just encourage you to check that out. All the information on ruraltax.org is free. Plus, I'm pulling a lot of information from IRS. The IRS.gov. that'll get you. IRS does populate a lot of helpful information on that website, and again, that stuff is all free. So let's kind of talk a little bit about I didn't set up an agenda slide, but I think what will I'll just verbally tell you where we're going with this. Want to start the discussion off kind of talking about why records are important and what we can use those records for. The middle part of the program, what I want to do is I want to actually walk you through line by line both a Schedule F and a 4797. And the reason for that is the vast majority of your business transactions that you're going to have in the farming operation are either going to get reported on a Schedule F, or the 4797 is where we're going to report capital sales. For instance, if you're a livestock producer, you're selling breeding livestock, or if you're a crop producer and you happen to trade a piece of equipment or buy a new tractor or buy a new disc or some type of implement, uh, those are going to be considered capital purchases. If you sell it or trade it, it's going to be considered a capital sale. All right. That's where that information gets reported, is on the 4797. So it's important for you to kind of understand more so when we want to put something on Schedule F and when we want to show something as a capital asset or a capital asset purchase or sale. Folks, the reason why that's important to keep that separated is we get more favorable tax treatment if we treat that if we the stuff that should be sold as a capital asset gets more favorable tax treatment than the stuff that we put on the Schedule F. All right, case in point, I've seen this happen lots of times. Somebody, and I realize that we're probably heavy on the livestock producers in this in on this video. Yeah, I've seen people sell, for instance, they'll sell a raised cow, and they take her to the sale barn. They sell that cow. What they do is they report it on Schedule F, and that's not where it belongs. If they put it on Schedule F, you're paying ordinary tax rates plus self-employment tax. If we sold it as a capital asset, we're going to pay, potentially capital gains rate with no self-employment tax. It's a cheaper rate. So, record keeping not only helps us on the management side, but there's no point of paying more tax than what we have to. All right. So reporting stuff correctly always helps us out. All right. So on the importance of records, the financial management and planning, really careful. I mentioned our motto for the association. If it isn't written down, it doesn't exist. And accurate records, it's really critical because that's how we are going to determine profitability. Right. One of the things we do with the Farm Management Association is, you know, we work on the taxes, but then we also do a farm business analysis, and that starts with the Schedule F. And then what we do is we put balance sheets on the bookends on that thing, and we make accrual adjustments based on the changes of the balance sheets. Uh, and we can't do that unless we got a good set of books. All right. Regulatory compliance. All right. We need to have a set of books to back up that tax return. We also have, depending on your locality, we have you probably have some environmental regulations that we've got to deal with. The plus, eligibility for government subsidies and labor laws. All right, if you have employees, you've got to maintain those records. All right, got to maintain the proper, and payroll records are a little more complicated. We're not going to get into payroll today, but payroll is a whole different animal. Now, you also have to have a good set of books for going in and doing a loan application. All right, the typical thing that bankers are going to want is, I know in my part of the country, when you walk into the bank, you probably ought to have a balance sheet. Bankers are going to want to see a balance sheet and an income statement. When we do FinPack analysis for the association, that's something that everybody gets in January. and a cash flow if they need it. So those are papers that they can take into the loan to the loan officer at the bank. The other thing that the bank is always going to want is they're always going to want a copy of the Schedule F from the tax return. In fact, they normally want the entire tax return, but they definitely need to have the Schedule F. The decision making on profitability analysis. I mentioned earlier. Well, I'm gonna mention the software program called FinPack. All right, now FinPack is a product that's put out by the University of Minnesota. The Center for Farm Financial Management has put that program out since the 1980s. It is not an accounting program. It is actually an analysis program. We use it to put together balance sheets, income statements, cash flows, and then do an analysis on the farming operation. But part of that analysis is we're looking at well, it does a ratio analysis, and that ratio analysis tells us how able the producer is to repay the loans. And that all can be quantified in in an analysis report. So if we have that already and a producer's looking at possibly replacing a piece of machinery or possibly expanding, maybe looking at expanding the cow herd or possibly expanding the farming operation in general, possibly purchasing some more land. All right. With those analysis numbers, those types of discussions are a lot easier. And it all starts with the records. Now, the final thing on this importance of records, we look at this risk management piece. So, we know any of you that have been following, national commodity markets. Now, where I live, we're pretty much in Southwest Minnesota. We're pretty much all corn and soybeans, a little bit of wheat, and then we have some swine producers in the area. We got a fair number of hogs, but the main thing right here where I'm at is going to be corn and soybean production. So, prices have been lousy on corn and soybeans for like the last 3 years, are particularly bad right now. But we've been looking at the profitability end of this thing. But when we talk about risk management, we're not only talking about market risk. We've got weather related risks. We've got legal risk. We've got we need to manage all sorts of different types of risk. Uh, Conversation I often have with producers is, they're planning on carrying some level of crop insurance on their commodities, on their row crops, but the decision is how high of a level do they want to carry on that crop insurance. That ties back into this, and a lot of it amounts to looking at those financials. How, when we look at those financials, we can tell real fast how able or how possible that producer is to weather some type of an adverse event. All right, so that's where that thing really comes down to. So what we have here in this record keeping piece here, uh, when we talk about record keeping, and this is kind of addressing what we want to keep in the files. All right. So on the receipts, all right, when you're talking about the receipts, it's one thing to write it down in the book or to put it into your software, but you should have a file to retain receipts, invoices, register tapes, charge slips, in fact, any type of a receipt that you come across for the business, we should retain that. Bank deposits, bank deposit slips. If you've got, when we do business, I mean, in normal business terms, it's not uncommon for someone possibly to issue us as the producer a 1099. All right. We need to make sure that we retain those because that's something that we need to give to our tax accountant when we're sitting down to do the return. All right. Now the 1099K, that's for online. That's for online merchandise sales. That's probably not real appropriate for the farm side of things. But essentially anything that is going to be pertaining to any type of cash transaction, receipts, invoices, cash tickets, really don't want to throw anything away. All right, just keep it in a folder. My preference as a consultant is to have those sorted by month. I mean, get yourself one of those accordion folders at Walmart. They're not very expensive. They got a pocket for every month. All right, the stuff that happens in January, shove it in there. All right, so that way at least you got it. And inventory, inventory records as far as invoices, receipts, canceled checks. That's another thing. We want to make sure that we're keeping those canceled checks and any credit card statements that we have in there, canceled checks, receipts, and the like. And also on the payroll side, all right, if we have payroll, it's critical that we keep those records, retain those for a good long time. All right. Uh, we need the details on the employee compensation. Plus, we need to keep records for any of the payroll withholdings that we do and those payroll deposits that we make. All right. And possibly if you have, like in the state of Minnesota here, the legislature a couple of years ago passed a law. We're implementing in 2026 a statewide Minnesota paid leave program. It's a state-run sick and safe time type of program, and it's really critical. Producers are going to have to, if they have employees, they have to remit a premium to the state on that. Now again, that is only a Minnesota-based thing, but there's going to be a lot of records that go into that. All right, other things that we need to keep track of on your assets. All right, it's important to keep records of when you purchased certain assets. All right. Like, for instance, a machinery purchase. All right. It's a good idea to retain that stuff. Retain that in that. I told you, get that accordion folder. Well, keep that machinery purchase paperwork in there. All right. So that way we can always go back and double check when that happened to be purchased and how much we spent for it. That's helpful when we're determining and setting up that depreciation schedule. All right. Also, any loan paperwork that goes along with any of those purchases. That's really critical. All right. Because very seldom does a producer just go in and pay cash. A lot of times they might put some money down, but the rest of the purchase happened to be financed. All right. So we want to make sure that we've got that loan paperwork there handy as well. Plus, uh, equity. Now what we're going to do is we're going to calculate that equity on the balance sheet when we do that, and but that really comes down to having that list of assets. All right, having that list of assets. So, uh, some different ways of record keeping. Some different ways of record keeping. Now, there are manual hand kept record books. There's one I think I could still get for one of my professional organizations, NATP. They've got one for sale. It's under $10, and it's going to probably accommodate a medium-sized operation. Probably the best option that you have is the Farm Service Agency offices in your county. FSA is still putting out some of those hand-kept record books, and the last I checked, they were still giving those things out. All right, so if you need a record book, you can just go to the FSA office and they'll give you one because they're still printing those things. Now, those record books are simple, but they are also prone to errors. And the reason for that is that you're taking something, you're writing down records off your canceled checks, you're transferring that number to a hand kept record book. There's potential to write it down wrong. And then you also, bad part about a record book is somebody's got to add that thing all up at the end of the year. All right. So maybe you got somebody with a that's good with a 10 keypad and they add that up with an adding machine tape. There's potential for error in writing it down, there's potential for error in adding it up. All right. Now, spreadsheets. All right, there's several downloadable spreadsheets out there for putting together a Schedule F and just a general set of books. Those are flexible. They're most of them are, if they're not free, they're going to be very inexpensive. The bad part about spreadsheets is they still are a little bit prone to error because it's not real easy to reconcile back to the bank statement in a spreadsheet. All right, that's probably my leading uh, complaint about folks using spreadsheets for their records program is there's really not a good way to go in there month by month and reconcile that back to the bank statement. We can check that ending balance at the end, but if it's off, it's like finding a needle in a haystack to try and correct the problem. All right, there's no substitute for doing monthly reconciliation, and we'll get to that here in just a little bit. Now, farm management software. All right, so on the record keeping side, there are several different applications that are going to be really, really nice for keeping accounting records. And at the end of my presentation today, we're actually going to run through several of those programs that you can buy. I guess there's three of them specifically that we're going to talk about. Quicken QuickBooks, and there's a product out of Iowa called PC Mars that I've been using for over 20 years, and we'll talk about all three of those, kind of some advantages and disadvantages. Now, there's also mobile apps out there where you can do stuff on your phone. And I guess if you're into that kind of technology, I'm more of a guy that I want to sit down at the computer and punch stuff in out of the checkbook and reconcile it back to the bank statement. The cloud-based solutions, all right, there's also some cloud-based uh, software applications out there as well. But everything we're pretty much going to talk about today is going to be something that you're going to load on your computer, or it's going to be, I guess QuickBooks is trying to steer everybody towards a cloud-based application. When you do QuickBooks online, you really don't have the software on your computer. It's coming through the internet. So best practices. All right. So in looking at our best practices on this, uh, the best solution that I can offer here, folks, is get into the habit of reporting those transactions and taking care of your records on a regular and timely basis. Now, I realize during planting season and harvest, you're probably not going to have everything caught up as much as what you would in the middle of the summer. All right, because we're working night and day to get the crop in, we're working night and day to get the crop out. But outside of those two periods of time, we should be able to keep everything up to date. Now, folks, I could tell you stories of clients. When I was with the association, we would always set up. Part of the association membership is I would set up appointments with all my farmers, and I would meet with them. We'd start about the second week in November, and we'd have those appointments going all the way up to New Year's Eve. And what they would do is they'd come to that fall tax planning appointment. They'd bring their books that they had they'd bring their year-to-date books. All right. I'd do a quick review, make sure that there were no glaring errors in there or anything. And if they were keeping their books up to date over the summer, I did a summer visit for everybody, and that's what I did at the summer visit is I looked at the books to check for errors and fix stuff right then when I was on the farm. But what we would do is we'd look and see, all right, where do we stand from a net farm income standpoint based on the books? Then what we do is I ask the farmer, what additional income do you have to take before the end of the year? Plug that in. What additional expenses do you expect? Put that in. All right. Then we start playing with, all right, maybe prepaying expenses for the next year, deferring sales into the next year. We do the tax planning things to try and get that farmer where they need to be. All right. So it's really critical that those records were good when they came into that appointment because we were making decisions that literally had the impact of tens of thousands of dollars. All right. So it's really important that that was right. I can recall a couple clients that what they would do is they would procrastinate. They would procrastinate, and then they would procrastinate, and they would procrastinate. All right. They'd cancel. They'd postpone their first appointment, their second appointment. And I remember one year, they literally came in the morning of New Year's Eve, and folks, when you print off a software report, it shows you what time the thing was printed. The report was printed at quarter to 3 a.m. All right. Now, the way that report was put together, how confident am I that everything was right? Not very. All right. So keep it up to date. All right. Just get in that habit. Reconciling records with the bank statements. Oh, yeah, skip one here. Categorize income and expenses. We're going to talk about we'll talk about chart of accounts here just momentarily, but the reconcile records with the bank statements. This is one of the greatest management things that you can get into. Folks, once you start reconciling on a monthly basis, you'll never go back. You'll never go back that old way. All we're talking about doing is just entering your transactions. And when the bank statement comes or becomes available electronically, because not everybody mails them anymore, but just reconcile that back to the bank statement. All right, that ensures that we've got everything in your records is going to match what went through the bank account. All right, it catches so many errors. All right, plus make sure that you're doing the backup. All right, data backup is critical. Every time you put enough information in there, you don't feel like retyping it all, do a backup. All right, folks, I do a data backup every single night before I leave the office, period. No exceptions. All right. So, I do a data backup every single night. And if you got farm staff that are helping you with this, it's a matter of training them as well. So on the section recap, this is kind of looking at this first section here. All right, accurate records are really, really critical. All right, it's what ensures our accurate records. It assures financial stability and operational efficiency because we can't work with the records unless we got a good set of books. All right. And, I encourage farmers to adopt those modern tools and best practices. All right. I'm never going to scoff at anybody that's doing a hand kept record book. It's more work, it's more prone to error. But if that's what the producer is comfortable with, more power to you. All right. So, next section, I want to hit a little bit on this reconciliation of uh, of the uh, of the bank statement. All right. So, what reconciliation does is all we're doing is we're comparing our checkbook register in your computer software to the bank statement. All right. And what we're doing in that regard is, we're just making sure that all those items match up. Now, whenever you do this, you're going to have some transactions that have cleared the bank, meaning that it's in your check register. And when I look at the bank statement, the bank is going to show that, okay, these are checks that you wrote, or these are online transactions that you did, and they're on the bank's records. All right, we check those boxes because what we're trying to come up with is we're trying to come up with the balance that I've got on my check register, which includes stuff that may not have cleared the bank yet. All right. But what we want to do is we want to arrive at what the balance on my checkbook is when I'm just looking at the stuff that cleared the bank. Those two numbers ought to match exactly. If it doesn't, I've got an error very likely in my books. Find it before you go any further. All right. And that way our cash is balanced. All right. Now, the importance of this is it ensures accuracy of the financial records. Uh, Folks, I started doing tax and analysis in 1990. Before that, I was a high school ag teacher for 6 years. And but I've been doing this since 1990. I've never had anybody that started reconciling that ever stopped. All right, I have had folks over the decades that found huge errors. All right, huge errors that get found that way, and not all errors are to your disadvantage. I mean, we found we had when I was with my the first firm I was with, we had a person that ended up being our client came in, and one of our standard policies was we looked at last year's return and we did a bank recon on that particular client. We found an $80,000 error where they had reported $80,000 worth of income twice. All right, and we went back and amended the return, and that person thought we all walked on water because otherwise they would have never caught that. All right, it also prevents fraud and other unauthorized transactions. I don't have to preach to you about the fact that we've got, there's a ton of fraud out there, both online, over the phone. It doesn't matter. There's a lot of people out there trying to steal your money. All right. And one of the best things that you can do is regularly look at that checkbook and make sure that you don't have any unauthorized transactions in there. And that's the other reason why reconciliation is really, really important. It also is going to improve your cash flow management because you're going to be looking at those books every month. All right, you're going to know what those balances are. You're going to be looking at, when you're doing that, once you start doing this, folks, you're gonna after you get done running the reconciliation, you're gonna run a profit and loss statement or a cash flow or something or a general ledger to look at your categories and your transactions and you're gonna spend more time paying attention to your books. All right. Plus, it's going to support your compliance and reporting. Also detects any issues early. All right. Really, really important. Now, there's a couple of different ways that you can do reconciliation. You can do a manual reconciliation. If you print off to even to this day, I guess I have one account that I still print the bank statements off for. I'm a treasurer for a nonprofit it's our group of ag educators at the University of Minnesota. We have an association, and I happen to be the treasurer and take care of all the books. When I reconcile that, when I get the bank statement from the bank, if I print the thing off, it's got a worksheet on the back page of it. All right, and that's essentially you can fill out that back page to do the reconciliation, or you can do that through your accounting software. But it's important that you do that every month. Now, this happens to be a screenshot of what the PC Mars reconciliation would look like. Now, let me get my little laser pointer going here. See the top items here. What this is these are the deposits and these are the checks. All right, it separates those out. And what we do is down here on the busy part of this, we put down the date that we're doing the reconciliation. We put the information in that comes off the bank statement, which is that ending cleared balance. And we're going to enter that down here at the bottom. And then what we're going to do is we're going to start clicking off the transactions that I've got on my books that have cleared the bank. All right. I click all those items to clear those items. And when I get done clicking, my cleared balance ought to match that cleared balance on the bank statement. All right. And if that matches, I'm good. All right. So that's all that amounts to. The hardest part about reconciliation is getting that beginning balance figured out. But goes back to my first slide. Be a good user of professional services. Your tax professional will be more than happy to help you get started on that. All right. So best practices, keep receipts and payment records organized. I mean, I still am a fan of that accordion file. All right. Keep all those receipts, deposit tickets, anything to do with a bank transaction. is going to get saved. Loans, purchase agreements, anything. All right, save it all. Record those transactions promptly. Let don't get 6 or 9 months behind. All right, it's just gonna be a headache for you. Investigate discrepancies immediately. If something doesn't match, find it. I mean, it's simple math. Something, either something didn't get written down, or the most common thing that I find myself doing is I might transpose a couple numbers. I'll be off a little bit, but it just doesn't match perfectly. Uh, Use secure and updated accounting software. All right, real key. So on this section recap here, looking at this again, regular reconciliation safeguards financial integrity. It's going to help you catch if you got fraudulent transactions in your checkbook. If you're not looking at that thing for 6 months at a time, they can do an incredible amount of damage without you looking at that. I mean, this is just it's just nowadays it's basic risk management is all it is. So and plus I encourage my farmer members to adhere to those. All right. Next, what I want to do is we're going to talk a little bit about the chart of accounts and Schedule F. Now, the reason why we're doing this is in order to understand how to keep a good set of books, you really need to understand where this stuff is eventually going. All right. And if you understand where it's eventually going, I think it makes the record keeping side a lot easier. All right. So on the Schedule F, all right, the Schedule F for a sole proprietor, the Schedule F is the form that you use to file your farm income and expenses on the 1040. All right. Now, it is the building blocks of profitability. We do not use the Schedule F to determine profitability. Repeat that. We do not base profitability on the Schedule F. The reason for that is in the tax management process, we're doing all kinds of things like deferring income, we're prepaying expenses the year before, and we're doing all kinds of things to try and manage that tax bill, which is going to taint the Schedule F for just looking at profitability without doing an accrual adjusted analysis, uh, looking at that beginning and ending balance sheet. The Schedule F doesn't tell us much on that profitability piece, but we've got to keep an accurate Schedule F in order to come up with those good numbers. Now, the chart of accounts of everything that we're going to talk about here, this is the one thing that you're probably going to want to get some help on. All right. The chart of accounts is really the foundation for organizing our financial transactions. So when I go, regardless of the type of software program that I'm in, if I'm putting in an expense and I get to the point where I'm going to categorize or code this transaction, if I just bought fertilizer, well, what I'm going to do is if the transaction's all fertilizer, well, I want to code it as fertilizer, which is an item on Schedule F, right? And I want to have all those expenses on Schedule F. There's going to be a code or fertilizer just be listed in my chart of accounts. So it's important to make sure that you got that account set up right at the very beginning so that we've got the entire chart of accounts and we can be consistent in our reporting. All right. That is really critical. All right. I've had people that just bought a copy of Quicken off the shelf and they started putting transactions in there and they start adding chart of accounts as they go. And what we notice is that we end up with like 4 or 5 different accounts for feed. We end up with multiple accounts for fertilizer. We end up with this stuff scattered all over the place. All right. Whereas if you get somebody to help you, you got that single set of chart of accounts. All right. So globally on the Farm Records program, we've touched on this a little bit already. Okay, we got computer software, manual record book, and spreadsheet. We've already talked about that a little bit. The manual record book, there's options out there that you can use. I think if you're going to go that route, check with the FSA office. I know as of last year they were still giving those things away. Now they might not be printing them anymore, but I know as of last year, they still the FSA still had that hand kept record book, and I'm suspicious they still do. Now, in any good set of books, we're going to have these are the major segments to our books. All right, I want to have a section for nothing but farm income. All right, all of my all of my grain sales, livestock sales, they're all going to be in one section. All right, same thing with farm expense. All right, whether I'm buying fertilizer, seed, chemicals, paying professional fees for my tax prep. All right, all is going to be under farm expense because those are farm expenses. I typically want to have a section carved out for those capital assets. So I talked about that earlier. If you're selling breeding livestock that's not taxed the same as what the Schedule F items are, I want to put that in a separate section, capital assets bought and sold. Right? So it shows up in a different spot on my records. I don't want to sell cows on my Schedule F because I don't have to pay self-employment tax on that. All right. I think it's very important to account for all any money borrowed and debt paid. All right. And most of your programs are going to have the capability of tracking loans. All right. Very important on that. I also am a firm believer in tracking family living expenses. Because again, if it isn't written down, it doesn't exist, right? But there's no way of knowing what it's costing you for family living unless you write it down. It's just that simple. All right. So uh, I've got a couple pages here that we're going to look at here. Now, this is just an example of a P. This is what a PC Mars report would look like on the income side of things. Now, the PC Mars program, and we got more slides coming up on this in a little bit. The thing I like about PC Mars is that it is a farm specific program. All right, meaning that when we look at this here, for instance, I've got corn sales right here. All right, I can document in this sale, I can document the number of bushels. All right, if I happen to be selling livestock, I can document the weight, and it's going to add all that up within that category. Plus, it's gonna sub add give me a subtotal of every one of those of those corn sales within that corn account. Right. Same thing with beans. I mean, I can document the units, which in this case would be bushels. In the case of livestock, I could indicate the weights and everything. So this is where my income goes, and the thing about a farm program is that it allows us to document head counts, bushels, and weights. All right. Quicken in QuickBooks is not going to allow us to do that. All right. We can make memo entries in those programs, but it doesn't subtotal it when we print the report. All right, here's the expense side, a little smaller, but you kind of get the idea. All right, we've got seed expense, chemicals, crop market storage, crop drying, livestock supplies. We've got fuel, repairs, interest, and origination fees for a CCC loan. So it prints off a similar type of thing, and in a lot of cases we might have units that are applicable for those particular items. All right, so what we want to do next is I want to look at the top part of the Schedule F and differentiate a few things here. Now I'm going to hit a couple of these a little harder than some of the other ones, but I'm going to gloss over this. I'm kind of looking at my time here, and I need to kind of ratchet it up a little bit here. So on the Schedule F, all right, there's two methods of doing your accounting. There's cash basis and accrual basis. Now, on the cash basis, folks, I will state this. I mentioned earlier, I've been doing this stuff since 1990. In that whole amount of time, I have only ever had two people that were accrual basis. I mean, most people are cash. All right. And when we talk about cash, what that means is When we make a cash sale, we report it as income at that time. We report expenses when we pay them. We report the income when we receive it. All right. That's cash basis. All right. On accrual, two things change. All right. We do need to book income. If say like, okay, today is, I got to even look. Today's the 18th of December. All right. If I happen to sell, if I contract, uh, for a sale of cattle, for instance, today. All right. Uh, Even though I might not get paid, for a few days, it's when I actually book the sale, that's when it gets reported in my books. All right. That's the difference with accrual is we book income when it's actually when we do the paperwork. The other thing that happens with accrual is we make some adjustments based on ending and beginning inventories on the back of the Schedule F. All right. So those are the two things that we do differently with accrual, but most folks are cash. All right. Now going down the list of items here, I'm gonna run through these pretty quickly. Lines 1A and 1B are used exclusively for purchase for resale items. The most common is of those is going to be if I happen to be a cattle feeder. If I happen to be a cattle feeder, when I buy some calves or yearlings that I'm going to put in the feedlot, all right, when I buy those calves or yearlings, I can't deduct the cost of those animals until I sell them. All right. So we carry that cost over until I actually sell them. And that's what 1A. 1A is when I sell, when I get done feeding those animals out to market weight and I sell them, that sale goes on 1A. On 1B, that's when I get to deduct the purchase cost of those calves or yearlings at the time that I bought them and put them into the feedlot. All right. So that's a little extra record keeping on everybody's part. And then it just nets those two out on 1C. Now, line two is where we put all our raised animal sales and all of our crop sales. All right. So if I'm selling corn, I'm going to sell it on line two. If I'm selling soybeans, I'm going to put it on line two. If I'm selling raised calves, all right, not resale. These are calves that we had out of the they were mama cow. My mama cow dropped them. We fed it out to weaning weight, and then we sold them, and that's going to be a line two item. All right, if you're doing business with a cooperative, all right, you're typically going to get a 1099 PATR or a 1099 PATRA, as we call that. And that's reportable income on that 1099 that gets reported on the co-op line. All right, line 3A and 3B. If you're enrolled in any government program payments, you're going to get a 1099G, and that's where that goes on line 4A and 4B. Now, one other option that you have in agriculture is you can seal grain. You can take out a CCC loan on grain in storage. All right. And we got the option with the CCC loan, we can either take that as income or we can treat it as a loan. And that's an election that we do on the tax return. If we're treating it as income, we report that income on line 5B. All right. If we received any crop insurance, it's going to go on 6. If we did custom hire work for a neighbor, say for instance we did some machine hire or some type of custom work for a neighbor and we got paid for that, that's where that gets reported. And line 8 is other income. That's kind of the catch-all for anything that doesn't fit on one of the other lines. Common things that go there is if we got like fuel tax refunds or something like that. Now, what a fuel tax refund is if as a farmer, the fuel that you're buying to put on the farm is if you're paying tax, if you're paying tax on that fuel and you use it in the agricultural operation, you can apply for a fuel tax refund. Right. And if you get that refund, excuse me, if you get that refund, that that income ends up coming back in on income, and that gets reported on line 8. All right. And then line 9 just adds everything up. All right. So on the bottom part of this Schedule F is all the expenses. All right. And again, every one of these line items is going to be a separate chart of account item. All right. Want to separate that out. Car and truck expenses. All right. Essentially, it's business vehicle expenses that's going to go on line 10. So anything to do with business use of vehicle expenses, that's going to end up going on line 10. If you're buying chemicals, uh, herbicide, uh, herbicide or fungicide or anything that gets into a crop chemical type of thing, conservation expense. Now that's going to usually be your dirt work. Uh, if, for instance, like if you hired a backhoe to come in and clean out a drainage ditch or something like that, I mean, that's going to be an example of a conservation expense. If you hired somebody to come in and do custom work, like if you had needed to have somebody come in and do some dozer work for something on the farm, that would be a line 13. Depreciation. Not going to get into that real deep here today because that's probably something you're going to need to have a discussion with your accountant with. All right, but what the accountant's going to do is the accountant's going to look at that stuff that you've got in that capital assets bought and sold, and that's where they're going to look for the stuff that needs to go on the depreciation schedule. All right, and that gets reported on line 14. That's an accountant thing. If you've got employees and you're providing any type of employee benefit, that's going to go on line 15. 16 is going to be any feed that you bought, okay, including hay, right? Might be creep feed, might be, bag feed of some sort. Hay is going to be included in that. 17 is fertilizer and lime. 18 is freight and trucking. 19 is anything to do with fuel for the farm, right? But you want to make sure that it's farm fuel. Insurance other than health. Health insurance is not going to go here. Health insurance is there's a self-employed health insurance deduction that goes on the 1040. That's the place for that. All right. This is going to be insurance like property casualty and liability policies for the farm. Interest paid. If you have any interest on loans, that's going to go on line 21. And if you have any hired labor, that's going to be a line 22. All right. If you have any retirement plans for employees, that's going to be a 23. And if you're renting any land or machinery, that's going to be a 24, line 24 item. Any repairs or maintenance that we need to look at on that. Now that would be just general repairs. Now we have had I got a slide that talks about this, and I'm going to probably gloss over that. Anything that you think is a repair, probably initially stick it here. We have some clarification in the last 10 years. It was called the tangible property regulations because we always had a tug of war on if I spent a lot of money on a repair, I might have to depreciate that. Well, we have clarity now on what we're able to depreciate or what we need to depreciate and what we can take as a repair. Seeds and seeds and plants purchased for seeding purposes, line 26. Any storage that you're paying is going to be line 27, and then that's the way that all lays out on the Schedule F. There is a slide here that talks about these tangible property regulations. There's several safe harbors that you're going to want to visit with your accountant about, but the safe harbor that most folks are going to be applicable for are if you're not doing an applicable financial statement, and most folks don't, because an applicable financial statement is going to be if you go do an audited financial statement with a CPA. Most folks don't do that. I mean, that's for the super big operations. But the general rule of thumb is we can do $2,500 per invoice and call it a repair. All right, and that's a safe harbor that we can work with. Now the rest of this is pretty straightforward. Supplies, like if you're buying baling twine or that'd be a good example of like supplies. Property taxes are going to be line 29. Utilities on line 30, that is the business portion. All right. Any vet and breeding fees, line 31, and then other expenses on line 32 is kind of the catch-all. All right. Totals them up on line 33 and nets it out on line 34. All right. And then the bottom of that is going to look something like that. All right. So if I populated this was a case study that I did at a lender school last year. But what we have there is that's where the Schedule F is. But as I mentioned, folks, it what's really critical about this is your records want to match up those lines on the Schedule F. Now, I strongly suggest getting some help with those chart of accounts because if you got a good chart of accounts, they're going to be set up already, and you just have to pigeonhole it in the right spot. All right, I'm going to gloss over this really, really fast, but the Schedule F on the accrual side of things, the accrual adjustments, if you happen to be uh, accrual basis accounting, the back side of the Schedule F is what takes into account the inventories. Now, the inventory adjustments occur on line 45 and on line 45 and also line 48. That's where we're going to be indicating that beginning and ending inventory to be used on that. Now, shift gears here a little bit. On the 4797, I want to spend just a little bit of time on that because this is where those capital assets are going to be sold. All right. And we need to understand how to differentiate those because that's really critical on this. All right, because the 4797 is used to calculate capital gains and also ordinary income. All right. And the parts here are kind of immaterial. That's not really, the parts here are not really all that important. But the point is, if you're selling breeding livestock, you don't sell breeding livestock on the Schedule F. All right. We need to put those breeding stock sales into that capital asset area. All right, capital assets bought and sold. Let the tax preparers sort that out, and because ultimately that's where this is going to end up. Ultimately, that's where this is going to end up getting sold. All right, and it's real critical that be done right. Now, the part that something gets sold depends on what it is, how long you hung on to it, and whether you depreciated it or not in the time that you owned it. All right, and we don't need to get into all that detail. These are some slides that I used to go through the different components of that. That was a lender school that I was using this for, and that's kind of immaterial. Though the key point on 4797 is that's where capital assets get sold. For instance, if you're selling breeding livestock, or if you happen to be selling like a piece of land, or if you happen to be selling or buying a piece of machinery, all right, all that's going to end up in that capital assets bought and sold. All right. And your chart of accounts will be individualized on your individual computer for that. All right. The last thing that I want to talk about is I wanted to run through a real quick synopsis of some of the more popular accounting programs that I see around the country, and I wanted to touch on these. I guess I'm going to talk about three of them. This PC Mars program, which is out of Iowa, Quicken and QuickBooks, which are both Intuit products. They're headquartered out of California, but PC Mars actually comes out of the Iowa Farm Business Association out of Ames, Iowa. And it's been, folks, this program has been around since the late 80s. I mean, it's been around forever. I was using it back when it was still a DOS program, even before it was Windows. And but it's been around a long time. I'm not exaggerating, there are thousands of people using this program across the country. So it's very well tested. It's a good piece of software. Now, how they charge this thing is just cost wise. It's $80 a year per set of books. All right. So if you're a sole proprietorship, you can run everything as one set of books. If you happen to be operating as a corporation and you want to run you're going to have a corporate set of books and you're going to have a, individual set of books. You're really going to need two sets of books to get that pulled off if you happen to have a corporation or an LLC or some type of entity besides a uh, a sole proprietorship. The link there is going to take you right to their website. They've got demos that you can download. They've got training material for using the software. The biggest advantage that I see with PC Mars is that it's designed for agriculture. All right, it's got a units and a weight column, so you can track. You keep track of head numbers. If you're selling livestock, you can track head numbers and weights. And there's also add-on modules where you can have inventory control. So what the inventory module will let you do is the beginning of the year you put in the number of bushels of corn that I have in the bin. Well, as I sell it off, it tracks how much I've got left over. All right, so that's what the inventory control is. There's also for somebody who had to do double entry accounting, which most folks don't. There's an accounts payable, accounts receivable module. Also, there's a payroll module that has all the federal payroll tables and state tables already built into it. All right, and every one of those has an add-on cost, and I don't know off the top of my head. Those are all varying a little bit on that, but check that out. I mean, January 1's an excellent time to switch that stuff over if you're wanting to try a new set of books. And again, PC Mars, it does allow you. They've got a demo that you can download. You can put some transactions in there and see whether you like it or not. All right, Quicken. All right, Quicken's been around since the early 1990s. Now, it started out as a checkbook program. I've actually been using that program for our personal finances for, since the 1990s. I've been a long-term user of this. The the Intuit, like a lot of other software companies, have moved to an annual subscription fee if you want to keep the product supported. And I think I just got done renewing my Quicken subscription because I use Quicken to keep the our association records for the Ag Agents Association that I'm treasurer for. That's what I use to keep the book straight for that. And I think it was right at $100 that I ended up paying for a renewal just a couple weeks ago. So there's a bare bones program that just is like a checkbook register that they kind of start at $50 a year and go up from there. But this business and personal program that Quicken has, it runs runs $96 a year, but it's got the chart of accounts in there for the farm. All right. So it's set up to do a Schedule C, E, and F. F is for the farm. All right. And a Schedule C would be for a non-farm business. But the bad part about Quicken is that it doesn't have the weights. It doesn't have the quantity column. So you're not able to track that sort of stuff. I mean, there's a memo field that you can note that stuff in, but it's not going to add it up when you run a report. All right. So it does a good job of keeping a checkbook register, and as long as you got your chart of accounts set up right in there, it'll produce a farm set of books. It's just very limited in if you're trying to do an analysis. Now, QuickBooks is the last program that I wanted to talk to you about. Now, QuickBooks is more of a business type of software. Now, frankly, and I'm this is I will just lay this on the line for everybody. I think for a lot of farming operations, QuickBooks is probably overkill. It does have a nice payroll component if you've got employees and you need to keep payroll. It does have an add-on module for the payroll. It also will do accounts receivable, accounts payable, and invoicing. Not very many farms need to do that. All right, so that's kind of a wasted feature if you're looking at that. The it does really help an awful lot. The I don't recommend somebody who has very little accounting experience to sit there and set this thing up and start working with it. It's probably not going to end very well. All right. You need, if you're going to use this, you got to have a tax professional that's going to be working with you and helping you with some training and everything on there. Because this is a higher level piece of software, accounting software. And it's there's a lot of places where you can mess this up. All right. I've seen it. All right. So people with good intentions, they just don't understand, and they put stuff in the wrong spot, and it can mess things up. I mean, it's an option. Plus, the other problem is it's super expensive. I mean, the program QuickBooks is going to probably start you about 450, and you can go you start loading up features on that, you could spend over $1,000 a year on QuickBooks, because they're going to bill you annually for keeping track of all that stuff. Okay, let me get wrapped up here again on source acknowledgments, and we kind of talked about that a little bit. And folks, I'm going to open this thing up for questions. So Harley, if we want to address those things with the group, I could certainly do that. And if you want to just turn on the mic for everybody. And while we're still in the question mode, folks, but I'm gonna put my contact information up there in case you didn't catch that on the front side. And I guess I haven't really looked here. Do we have?
I haven't seen any questions yet, but
Okay.
everybody now has the ability to talk, unmute themselves and ask any questions that they may have. So feel free to do so, or you can still put them in the chat if you have any questions.
I guess Harley, was there anything that sparked your interest as we were going through?
You know, I guess maybe thinking about my family's farm, if we do paper record keeping, is there any suggestions that you have to make paper record keeping a little bit easier besides transferring it to a software? And I guess I could give you a little bit more of a description. So on this paper record keeping, we have one big sheet that's by month, and then by sheep, goats, cattle,
Hmm.
farming expense, and all of our expenses are written out that way. Is there
Okay.
something better that we could be doing?
Uh, it's the only thing that you might possibly look at. I mean, the spread, for what you're doing there, the spreadsheet option might be another thing that might ease that a little bit. And the main difference between, if you go to the spreadsheet, essentially you got the same thing in the spreadsheet of what you got on the paper, but the spreadsheet's going to add everything up for you. Now, either one, the biggest problem with doing either one of those is it's a chore to reconcile that bank statement, because the spreadsheets aren't they're not really set up to easily reconcile back to that bank statement.
We do have a question in the chat now. It says, "Hello, I lease land to farmers in conjunction to our operation. Which line item would I report that on my Schedule F? Thank you."
Well, if you are leasing land to if you're leasing land to other folks and you're not materially participating in their operation, that is not a Schedule F item. That's actually a Schedule E, which is where you report rental income. All right. So you really want to keep that, that rental income is going to be something separate. You'll actually possibly want to set up another chart of accounts for keeping those separate because that rental income is going to get reported on a Schedule E, and any expenses against that land that you're renting is going to be an expense on that Schedule E on your 1040, such as, those expenses might include your property taxes for that parcel of land. If you can allocate, like any farm and liability insurance tied to that land, that's also going to need to be carved out on that as well. Plus, if you're doing any improvements to the land, there, for instance, if you were to if you were to had expense of sticking fence in there or something like that, you'd want to depreciate that, but that depreciation is going to be against the rental income and not necessarily against the farm. You want to separate that out because the rental income is not subject to self-employment tax and the farm income is. So you don't want to slap extra income on the Schedule F unnecessarily.
Henry asked if they'll have access to the presentation. Yes, Henry, I will be sending out an email tomorrow that will have a copy of this recording along with the presentation, and it's going to have a copy of the recording and the presentation from Monday's webinar over agricultural taxes. I'll just have a recap email of everything all together. That'll come out tomorrow. From me, Harley Moore at nativeagfinance.org. And feel free to share those recordings and the presentations with anybody you might think has any value to that. Another question, if you are leasing hunting land, where is that reported?
Okay, that's kind of a gray area. I tend to lean on the fact that that is going to be a non-farm business and it's not a rental arrangement. That's more running a trader business. You really need to talk to your accountant on that to really get it pinned down what your accountant wants to do with that. Now, if I were doing your return, I'd be counting that as a business, so I'd create a separate chart of accounts for that. Now, some folks will treat that as a lease, some folks, as a rental type of thing. In my opinion, that's actually running a trader business. All right, but it's going to be separate from the farm because it's not farm income.
Does anybody else have any questions? While we are waiting to see if anybody else has any questions, I just want to plug in for another program that the Native Agriculture Financial Services has. If you are a farmer or rancher or know a farmer or rancher that is in need of financial technical assistance, the Native Agricultural Financial Services has been awarded a cooperative agreement from the 1890 Foundation and the University of Arkansas to assist farmers and ranchers across the country by providing financial resources, information, and one-on-one technical assistance. The NAFs will be assisting farmers and ranchers in need with any of the following. One, a current financial situation to explore options and practical strategies. Two, relevant regulations, laws, legal issues that impact financial situations. Three, participation in FSA and USDA programs available to improve financial stability and health. Four, provide one-on-one referral services connecting farmers with the most appropriate direct services for their operations. If any of these sound like you could be utilized, feel free to sign up at www.nativeagfinance.org/contact and then /again. And this is all free. We really do appreciate you guys joining our webinar today. Does anybody have any last minute questions? Hearing none, I